Morning, guys. It's Tuesday, July 29th, 5:25 a.m. Central Time. Grain markets are mixed this morning. Pretty quiet overnight trade. December corn futures up 3/4 of a cent at 4.14 3/4. November soybeans down 1/4 cent at 10.11 1/4. December Chicago wheat down 5 3/4 at 5.53. December Kansas City wheat down 4.5 at 5.42 1/4. December spring wheat up 1/4 cent at 6.03 1/4. We had some heavy winds in some areas of the Corn Belt yesterday and into this morning. I think let's start there.
Severe thunderstorms, fueled by extreme heat and high humidity, swept across the northern plains and into the northern Corn Belt on Monday evening. The storms brought multiple tornadoes to parts of South Dakota and Iowa, along with wind gusts in northern Iowa that topped out around 134 mile per hour. Widespread power outages were noted in some affected areas. The storms continue early this morning in eastern Iowa, Wisconsin, and western Illinois, although the heavy winds appear to have died down.
Yesterday, they were calling this a possible derecho event, and I don't know if we're calling this a derecho or not. I'm not going to call it that because that's going to stir up memories of 2020 when a lot of the crop in Iowa was blown down essentially by heavy winds. I was scouring the internet early this morning looking for reports of crop damage, and I didn't find it. If you guys are in some of these areas and there was crop damage, let me know. Drop something in the YouTube comments or send me an email to info@standardgrain.com. But it looks, the way that I read it this morning was that the winds have kind of died down, but you've still got some rain on the radar, which is, as far as the market's concerned, considered to be kind of a bearish item. Here's rainfall over the last 7 days, or through yesterday at least. We've had a lot of rain, and that's part of the reason the markets have been under pressure. More rain in the forecast for the next 7 days. This is the 7-day QPF. Eastern Corn Belt, maybe a little bit dry, parts of Indiana and Ohio. The forecast gets a little bit interesting here. So the next 7 days are pretty much smooth sailing. Above normal rainfall for a lot of the Corn Belt and below normal temperatures. Our friends at Crop Profit, based on GFS Ensemble data, and I'm told the GFS Ensemble has been the best performing weather model this year. We're going to run 1.8 degrees below normal across the corn country here over the next week. When you get out to this 8 to 14, it gets a little bit more interesting, perhaps maybe slightly below normal rainfall, and temperatures return to something that's drastically above normal. 4.9 degrees above normal expected during that 8 to 14 day period, based again on GFS Ensemble data. So you could have like a secondary heat wave type thing building here after maybe call it the second week of August. And, these forecasts 8 to 14 days out, are they always super reliable? Not necessarily, but this is something that you need to pay attention to, is this forecast. And this could be something for soybeans in the crop, especially as we move forward.
U.S. corn conditions declined slightly last week, but remain impressively strong. As of Sunday, 73% of the crop was rated good to excellent nationally, down from 74% the prior week, but well above the 5-year average of 64%. The rating was the second best in the last 10 years, only behind 2016. 7% of the crop was rated poor to very poor, up slightly from 6% the prior week. Soybean conditions improved, with 70% of the crop rated good to excellent, up from 68% the previous week, and easily surpassing the 5-year average of 62%. The rating was the highest for the week since 2020. Only 4% of the crop was rated poor to very poor, down from 7% last week.
All right, let's look at the corn rating. Second best out of the last 10 years. A few states saw declines last week. Texas was down 7%. Indiana was actually up 1. Ohio was up a little bit. Iowa continues to be the star of the show here. The Iowa corn crop is rated 87% good to excellent, and Iowa is our top corn growing state. So the market seems very much convinced that we've got this monster yield coming. And as I've mentioned the last few weeks, any sort of yield modeling based purely on crop ratings would indicate that your national corn yield could end up 3 to 5% above trend. A 3% above trend yield this year would be 186.4. A 5% above trend yield would be 190.1. And I have heard a little bit of chatter of a 190. I haven't seen any official, in quotes, estimates published that are that high. But maybe you'll see something ahead of this August crop production report. That's not my opinion of the crop by any stretch of the imagination. I don't really do opinions, but there are traders out there that are working with numbers along those lines. And maybe it's a little bit too early for soybean yield modeling, but soybean ratings have improved, and we're now at the third best of the last 10 years. they're going to start to do the same thing here. They're going to start to say, we're going to be X% above trend because of the crop ratings. And soybeans still got a long ways to go. We haven't even hit the month of August yet. But the idea that we're going to be above trend in terms of national yields for both crops is very much out there. And that's kind of the prevailing sentiment right now. What about wheat?
Spring wheat ratings declined for the second straight week. As of Sunday, 49% of the crop was rated good to excellent nationally, down from last week's rating of 52% and the 5-year average of 54%. 18% of the crop was rated poor to very poor. That's up from 16% the prior week. Meanwhile, the U.S. winter wheat crop was 80% harvested nationwide through Sunday versus 73% the prior week and 81% on average. Harvest is nearly complete or already finished in Texas, Oklahoma, and Kansas, 3 of the nation's top winter wheat producing states.
So to go back to spring wheat, we've seen a little bit of deterioration in the ratings, yet the market posted fresh lows yesterday. Your Minneapolis wheat contracts, not a good look by any stretch. And your HRW and SRW contracts are just floating above contract lows. So the market is still uninspired. We still got some stiff competition out of Russia.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Tons of corn marketing stuff the last couple days. Yesterday, I did a full review of my corn marketing situation, what I've advised as it relates to cash sales. Did old crop, new crop, and also some 2026 stuff. I take a very, very simple approach to this. It's cash sales broken down by crop year, and percentage. I haven't advised an options trade in like 2 years. So everything that I do is very, very transparent and easy to follow. Perhaps you should seek an additional, or not additional, you should seek a simpler approach to your grain marketing. And that is what I attempt to offer. Ryan was on Friday and talked about some super important basis stuff as it relates to corn in particular. That was a must-watch video. Ryan's very, very good with basis and spreads, and we ran through a lot of that. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. We just want to send you a ton of content every single day, and that's what we do. We have a morning email that goes out at 5 a.m. Central Time. We're out super early, and it's got all the headlines, charts, graphics, cash grain recommendations, everything that you need from us. And then there's a second email at 10 a.m. Central Time with our premium video for that day. There's an optional text message list. You don't have to give us your phone number. You can if you want to. All we're going to do with it is just send you messages. Give that deal a shot this morning, guys.
According to well-followed private group Ag Rural, 68% of Brazil's second corn crop has been harvested as of last Thursday. Dry conditions supported solid progress, with harvest advancing 13 percentage points from the previous week. However, during the same week last year, 91% of the crop had been harvested. Despite the delay, Ag Rural recently raised its forecast for Brazil's total corn production to a record 136.3 million metric tons. The increase was driven by higher estimates for the second corn crop, which is now projected to reach 108.9 million metric tons.
We're told that the crop is very, very big and perhaps even higher or larger than that recent Ag Rural estimate. I'll be curious to see if USDA follows suit and comes up with its number in August here in a couple of weeks. U.S. corn, because of the recent sell-off, is still competitive with Brazil. So we may still continue to do some export business in a window where Brazil typically would take over. But maybe as this crop gets harvested here, Brazil is going to take over the reins for a little bit.
U.S. and Chinese officials met in Stockholm on Monday for more than 5 hours to discuss trade talks. While no formal agreements were reached, talks are set to resume here today. A breakthrough deal is not anticipated, but the current trade truce is expected to be extended by 90 days. In an attempt to support ongoing trade talks, the U.S. has temporarily paused certain technology export controls on China. China has yet to purchase any new crop U.S. soybeans. However, the market is pricing in expectations that the nation will eventually begin buying.
Yes, and that is my feeling as well. So China, year in and year out, is the largest buyer of U.S. soybeans on the export market. They represent, this year, they're going to end up representing about 19% of all demand for U.S. soybeans. My feeling on this is that China, if I had to make a guess, China will be the largest buyer of U.S. soybeans during the new crop marketing year, which begins on September 1st. And also, I think that if the market believed that China was going to be totally absent from the new crop program, the bean market would be at $8.50. That's where we'd be. And the market's not trading that way. I think China's going to buy beans out of the United States when they're competitive. I think it's going to be a seasonal thing, as it often is. They're a little bit late to the table here with new crop. They haven't started yet. There was a flash sale that may or may have not been China recently. But if I had to guess, I think that they're still going to come in for new crop U.S. soybeans the way that they always do. Could it be in a reduced manner? Yeah, it could be. But I still think they'll be the biggest buyer next year.
The US dollar surged on Monday. The Bloomberg Dollar Spot Index gained 0.8%, its largest single day gain since early May. The rally came on the heels of the announcement this past weekend of a trade deal between the US and the EU. While the dollar is still down substantially from the beginning of the year, it has risen 1.5% since the beginning of July. Yesterday's rally was also supported by expectations that the Fed will hold interest rates steady this week.
So the dollar sold off sharply to start the year and really fell. And it did absolutely nothing to support our grain prices, I don't think. So does the strong dollar now supposed to be additionally bearish grain prices? I don't know. I'm not seeing the relationship right now. I'm really not in this relationship between the dollar and commodities, that like inverse relationship, at least our grain markets. I feel like it's really faded over the years. I do.
U.S. corn shipments exceeded pre-report expectations last week. USDA reported that 60 million bushels of corn were inspected for export during the week ending July 24th. The print was up 55% compared to the previous week and up 42% versus the same week last year. Soybean shipments were near the upper end of expectations at 15 million bushels. The print was up 8.7% compared to the prior week and up slightly versus the same week last year. Wheat shipments were poor, falling below expectations at 11 million bushels. The print was down 61% versus the previous week and down 38% compared to the same week last year.
Great corn shipment print, okay soybean shipment print, and a little bit subpar in terms of wheat. But the corn export program continues to impress.
We had numerous flash sales yesterday. U.S. exporters sold 9 million bushels of corn to Mexico for delivery during the 25-26 marketing year. Exporters also sold 9 million bushels of corn to unknown destinations. Of the total, 1 million bushels is for delivery during the current marketing year, and the remaining 8 million bushels is for delivery during the next marketing year.
Great to see. We need Mexico, and we need whoever the unknown buyer is also. USDA's got some fairly lofty targets for new crop exports penciled in, and we would love to hit or even exceed those. What did cattle do yesterday?
Cattle futures soared to new record highs, fueled by Friday's bullish cattle on feed report. Live cattle were 87 cents to $1.87 higher. Feeders saw gains ranging from $2.15 all the way up to $3.97. Box beef prices were also higher. Choice was up $1.05 at $367.73, and Select was up $1.98 at $346.85.
Stock market's up a little bit this morning. The Dow Jones is up 40. The S&P's up 18 points. Treasuries are just a little bit higher. U.S. dollar is marginally higher again after a big day yesterday. Crude oil is up 21 cents in the September WTI at 66.92. Have a great day, guys. We'll be back on Wednesday.